Now, as we look abroad, obviously we have President Biden speaking now about some of the sanctions that are coming in terms of blocking major banks. But again, unfortunately, it's a lot of the same. There as obviously we've ratcheted up a bit, but we have so far come out and said that we will not engage Russia in Ukraine, and that will also obviously be the case with Moldova as well as Georgia. And there's a good chance that those will also move under Russia's control. They've already been under Russia's control to an extent, but again, this is just going to become more of an official because there really are no issues in terms of doing what he's doing because the sanctions remain fairly soft. But when you look at global crude oil on the water, you can see that there's a big spike. It's right in line with where we were actually in 2020. It's just remaining elevated. That's something that I think is going to remain the case. You are starting to get a little bit more increase in crude that is coming out, obviously from Russia as well as from West Africa. It's going to be a matter of, where do these sit? Are they in transit? Are they in storage? So these are things that some of them will move into storage just because of the problems with purchasing Urals and Russian barrels versus what some of the other areas are. When you look at crude oil in transit, you can see that there was a big spike. We're still below that high from 2020, but you can see that there's more oil that has moved into transit. This is coming from West Africa. This is coming from some of the other regions, Middle East, and moving into, again, going to their locations with a lot of it at this point heading towards Europe as well as heading towards Asia. So then when you look at crude oil and floating storage, with seasonally adjusted speaking, we're still at all-time highs. We're above where we were in 2021. But you can see that in 2021, we had that dip and then we had an increase. It's going to be something similar because as China comes back from Lunar New Year, they draw down some for that was offshore, and then they go out and they purchase more, or they have purchased more, and it starts to show up. So again, that's that movement from in transit to in storage, and that's something that's going to continue to adjust. So then when we look at U.S. crude product exports, we had a slight increase in exports in gasoline of 246,000 barrels a day. That's still below the average. Distillate, same thing, an increase of 166, but below the average. As propane is actually 322,000 barrels a day above the average, with an increase of 29,000 barrels per day. That's something that'll come down a bit, but still remain much higher. And much more elevated. Right now, Biden is saying that the SWIFT is always an option, but right now, no plan to use it. So Russia will continue to use SWIFT. So that is a kind of a blow to what the support we will show the Ukrainian military and country. Now, when you look at total U.S. crude oil exports, you can see that there was an increase of 415,000 barrels a day, right in line with what we were saying, kind of back between this 2.6, 2.7 level, coming in with 2.686 million. We expect this to stay elevated and drift a bit higher, especially as some of the uncertainty remains on what is going to be the capacity for companies to buy Urals, or will they be coming to the U.S. in greater volume to buy our cargoes? When you look at gasoline exports, you can see that we're below the 5-year average. We don't expect to come back up. It could stay elevated just based on the amount of support that is needed in West Africa, given some of the flows, which could attract some of the European cargoes going into Africa, and then that could pull more U.S. cargoes into Latin America. So this could be supportive, but again, not going above the 5-year average, but just staying fairly firmly in that cloud. While distillate had a small increase, we expect it to remain fairly depressed in terms of exports, given where we sit in the U.S. on storage, and just there is a lot of demand for it abroad, just given where the shortages are really in the middle distillate section of the global stacks, and just in terms of storage, but the U.S. is part of that problem, which is going to keep our exports fairly reduced. Now, when you look at ethane exports, again, we're just going to continue to print new highs, still stay at elevated levels as our product continues to flow into the global market, especially China. Then when you look at crude oil exports, they, again, fairly flat. It's more important to look at it from the perspective of the 4-week rolling average, which is at just over 2.6 million. And we expect this again to now start to drift closer to 2.7 million barrels a day as we see some additional purchases from the U.S. Propylene exports, again, seasonally adjusted all-time high. We expect it to either be, at the 5-year average or just above, as demand remains elevated into the system. When you look at the spread between Dubai and Brent, you can see that Dubai is about almost $7.50, almost $7.75 cheaper than Brent. That's going to, again, support a significant amount of Middle East cargoes, and it's going to put a bit more pressure on Africa, because West Africa prices off of Brent, dated Brent, and here's is going to make it expensive. So we should start to see some of that actually widen out a bit, just to bring down some of the cost and incentivize some of those movements into the system. When you look at what was scheduled for March, you can see that Russia increased exports to 4.176 million. Norway elevated. Nigeria is actually going to be increasing some of their exports, given what are some of the issues that we've seen, obviously, with Russia. The unknown is going to be what is OPEC's response? Does OPEC increase production, increase supply to offset some of the lost barrels from Russia, or will they just remain in this level and just let things happen as they see fit? I would expect to see a little bit of an increase, but I don't expect much support to come from OPEC, to be quite honest. Angola, again, they did increase some of their exports. That'll remain a bit elevated, especially as we go into April. And then when we look at some of the other areas, I think you're going to see the European markets, and companies trying to increase production given where the current spreads are. So when we look at what has happened so far, as we said in our special segment, essentially Urals have gone no bid. There's offers anywhere between $11 below dated Brent to just over $12 dated Brent. It's just there's no buyers. Everybody's unsure of what's going to happen. Nigeria boosted the official selling prices of some of their crudes to the strongest level since February. And Angola, Senegal allocated at least 11 cargoes of April loading. Things have sped up in the physical market. When you look at where things have gone, obviously with what has happened, we've seen an increase in loadings. 15 Angola shipments for April are yet to find buyers out of 35. The preliminary schedule for April was released on February 18th. And then at least 11 cargoes were allocated to Senegal to term lifters. April cargoes for Congo have yet to trade after their scheduled release. And then Nigeria's April sales have yet to begin in earnest, as schedules of key grades have only just emerged. We expect those to be fairly quick, just given what has happened in Russia. But how quick is going to be indicative of where is dated Brent, where does that sit right now? Because dated Brent being at where it is going to be a bit problematic as to how quickly will some of these move. But we do expect to see an accelerated pull from the West Africa. We had a sizable build in European cargoes, and this was, as we were saying before, that big drop down from floating storage. So here we have that increase. We're right to that 9-year average in terms of what is typically there. We're going to fluctuate, obviously, with the sanctions. You're going to see some of this come back out of storage, but it's going to be a matter of how quick. We do have refiners that are in turnaround season now, and in maintenance, so that'll leave some of that crude additionally in tanks. But as Urals become harder to get or impossible to get, we could see this obviously remaining elevated. Then when you look at what has happened in the storage side, you can see gasoline had a small draw of 7. Gas oil had a small build of 44. Even though we're getting some of these adjustments, obviously gas oil still, it's off the lowest it's ever been, but you could see it's still very low in terms of where it typically is at this point in time. It's going to remain elevated it's going to remain depressed. There's a lot of demand out there, even as we go into turnaround season. Again, more activities coming into the market as there's a bit of an awakening from Omicron, which is going to keep a lot of pressure on gas oil in general. Gasoline still remaining elevated. We should see exports accelerate a bit, and that's back to the issues that we saw in West Africa and some of the additional flows into the U.S., which is going to again drift this a bit lower, and you will get a bit more demand from the European Union. And you can see here that it's just right where it normally is, as it was in 2020. Fuel oil has moved back down because of some of the shifts in Fujairah, which we'll talk about in a minute. We actually had some sizable pull coming from Europe into into the Middle East and in Asia, so essentially going west to east, and that has been able to pull some of this product into the market. They still remain fairly oversupplied versus historics, but this is something that we expect the exports to remain fairly strong as middle distillate, ultra low sulfur diesel, very low sulfur diesel prices itself out of the market and pulls in some of that additional high sulfur capacity. When you look at Singapore, again, as we were saying, kind of waffling up and down. Light distillate had a small build of 200,000 barrels. Middle distillate, even though it was already low, had a small draw of 100. And then we had some of that big movement in residual fuel of about little under 3 million. Now, the residual fuel is the one that we were expecting to see an increase in draw on just because that's people are pivoting away from some of that middle distillate, ultra low sulfur diesel, very low sulfur diesel, and going for that heavier resid side just because it's cheaper at this point. And that's there, cost is a big problem at this juncture. So as we were saying, we expect this just to go sideways in terms of totals. You can see that we're just below the average, but we expect to see this bounce, especially as light distillate still has some of these rebuilds, and then resid still has some of this lumpiness, which will put additional cargoes in storage. When you look at light distillate, still very high, obviously not as high as some of the previous years, but you can see just on average, it's one of the highest it's ever been. That's going to remain as gasoline demand, it remains problematic in the Asian continent, just with Omicron, especially in the ASEAN nations, and in China with some of the new outbreaks following Lunar New Year. So we expect this to stay fairly elevated. And then, as we were saying, just because of the backdrops, this is going to remain a huge problem. We expect this to remain at near all-time or new or seasonally adjusted all-time lows, just given where the demand is. But that price is, again, going to keep some of these residual fuels moving off the shelf, and it's going to keep us, again, fairly fixed to that 15-year average. But as you're seeing, just again, still staying fairly robust in terms of demand and keeping us fairly firm, as light distillate is really going to be the driver of some of those builds. Now, when you look at Fujairah, we had a strong rebound from last week. Total stocks rose 4.852 million. This is the single largest overall gain in stocks since reporting began. The previous record was on November 8th. So again, we had a record draw, now a record build. This is some of that lumpiness and volatility we were discussing. Light distillate increased 1.21 million barrels. The Asian gasoline complex has been backed by increased gasoline demand in anticipation of the upcoming Ramadan period and ease in COVID-19 travel restrictions. So you're starting to see some of that tightness, but market sources said that demand is on the rise due to the Ramadan side. But the fact that you still have an elevated amount of Omicron is kind of mitigating that, and you do have more supply, and there is some of that additional supply coming out. But that we will see some of these draws accelerate as some of this gasoline comes in to move ahead of the high holiday in the Muslim religion. Now, when we look at middle distillate, we had a build of 832,000 barrels. Supply side uncertainty continued to place that kind of floor underneath that gas oil market, but we're starting to see more talk on an increase in exports coming from China. So that's going to be an unknown because so far the export volumes have been capped. And I think when you look at the market, it's almost too much of a to entice them to come back out. So I think you're going to start to see a bit of an increase in exports in that level. And then India is also increasing exports as diesel demand remains a bit sluggish in India. Heavy resid had an increase of 2.81 million barrels. Right now, lackluster arbitrage movements of sulfur components for the low sulfur fuel oil blending pool have tightened some inventories, but again, that high sulfur side continues to see these builds and this kind of normalizing levels. So again, we expect to see. So to break it down, just to summarize, we expect to see draws across the board next week. A bit slower in light distillate. Gasoline, we think, is going to move back up. We do expect to see middle distillate surprising a bit to the upside, just as China comes back into exports, as heavy resid kind of waffles back and forth right at these levels. So when you look at Brent time spreads, obviously they've surged. They're over $4, and that's just because of obviously what has happened with Russia, Ukraine, and the uncertainties, and that's going to keep things very elevated as we go through really the remainder for the foreseeable future, just given what has happened with Russia and sanctions. China's supertanker crude imports, you can see they're trending back to new all-time highs. They're still below where they were in 2021, but you're seeing, again, a lot of this coming back into the market. And that's to replace, as we've said, the Asian floating storage coming back from Lunar New Year. Things accelerate, refinery runs increase, and that's going to pull some of that product and crude back into the market. North Sea back still at zero. You're going to get just direct movement of North Sea European cargoes right into the continent, especially as the issues with Urals persists. West Africa still seasonally adjusted high, but you can see that it has a sizable drop. That this is going to continue as we have more cargoes now moving into both Asia as well as Europe, and that's going to be supportive of dropping down West African cargoes. And then the fact that dated Brent is so expensive is going to keep Middle Eastern crudes moving. And as this moves out, this is going to be the one to watch to see how quickly or rapidly, or if at all, does OPEC address some of these shortfalls that are going to be created by Russia moving into Ukraine. And that would come from these nations, which would show up in this number. Europe, again, is going to stay low. All of these cargoes are going to be pulled as quickly as they can into onshore. And now here's where we're starting to see a bounce in teapot activity. The same with state-owned refiners. As we come out of Olympics, as we come out of some of this ramp, you have seasonal maintenance. You had the Olympics there. You had Lunar New Year. So we expect this to ramp back up, back to the average, and start to drift a bit higher as we get additional activity, which is again going to put additional cargoes on the water. We think in both gasoline and diesel, which is going to offset some of the builds, some of the draws. So we should see some steady builds in Singapore, still be very bullish, still be at the low end, and same with Fujairah as China gets a bit more active in the export market. So that's what we have for you today. If you have any questions, again, you can find us in the comments section as well as on Twitter. And we hope you enjoyed this and it helped kind of clarify some of the unknowns that as these situations remain very fluid. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.